call Amy Adams.
Thank you, Mr Speaker. It's a great pleasure to take a call on this second reading debate on the Insurance Prudential Supervision Bill. And, Sir, as has been mentioned, this bill, of course, spent some time at our Finance and Expenditure Committee, ably chaired, of course, by my friend and colleague Craig Foss, who did an excellent job of shepherding a very difficult bill through the committee. And it was a bill, as has been mentioned, Sir, that actually the committee worked very well on, I think, and certainly very cohesively and really with one purpose in mind, and that's to ensure we got the best piece of legislation in this important area that we could get. In my first reading contribution, Sir, on this bill, I spoke about the importance of trust and confidence in our financial sector, and I think, Sir, given the years that we've had behind us, not in New Zealand but the world, everyone is very aware of the importance of that trust and confidence and how easily it can be damaged, and not only that, but the damage that can be done when confidence and trust falls. We've seen all sorts of examples, even in more recent times, of what happens when there can be no confidence in our very important sectors. But, Sir, insurance is actually an important part of that. And when we've been looking at reform of the financial sector, I guess the focus has been a lot on finance companies and the like, but in this piece of legislation we are focusing on the insurance sector, and that covers, of course, life, medical, non-life, and, of course, as my friend Mr Garrett was talking about, also covers employment protection insurance for people who suddenly find themselves perhaps not in a secure employment position as they might have been at the start of the day. But, Sir, this is a strong regime, and it's an important regime, but we had to get a balance in our committee of ensuring that the response was enough to protect New Zealanders who rely on the financial sector and the insurance sector, but also wasn't overly onerous for companies and didn't go any further in terms of red tape and bureaucracy than we needed to go. And that's really actually where a lot of the committee's work is focused. The bill, of course, as we've heard, requires licensing of all applicable insurers, and a big part of our work actually was determining who should fall outside that catchment. We spent a bit of time talking about overseas insurers and to what extent the bill should cover them, and the decision was, Sir, that it shouldn't apply to anyone not carrying on business in New Zealand. But the two I wanted to touch on just briefly in this contribution were particularly the exclusions we've recommended for trade associations and other membership and professional voluntary trade associations and those that offer voluntary insurance benefits as part of their work. And I think it is important that we be careful we don't bring into an ambit of a bill like this any organisation that wasn't intended to be caught. And clearly the mischief that we are trying to deal with in this piece of legislation is those in the insurance sector proper, not those that offer some discretionary membership benefits that aren't really in the nature of a pure insurance company as we would think of it. So we have done some work, or recommended some work be done in excluding those associations from the bill. We've also, Sir, spent a bit of time thinking about small insurers and ensuring that we don't apply overly onerous requirements to them, particularly around some of the solvency requirements in the bill and the financial strength ratings. Existing insurers, Sir, will have the ability to be exempt if their gross annual premium income is over a figure that will be set, but we're thinking in the region of somewhere in the region of perhaps $1 to $1.5 million of gross premiums a year. Existing insurers in that category will be able to be exempt from the bill. But as I said, not all of the conditions of the bill, primarily financial strength ratings, some of the capital adequacy requirements and some of the solvency requirements. And I think that is an important part of the bill. We don't want to, as I say, be unduly onerous on small insurers who are in business and carrying on their work adequately and certainly weren't expecting this when they set up their business model. So, Sir, those are the two exemptions that I just wanted to touch on in this contribution. Others, I know, will address other parts of the bill. But I think the committee can be rightly proud of the work it's done. It certainly wasn't an easy area. It is a complex one. But as I said, under the careful chairmanship of Craig Foss, I'm very happy with where the bill has come to. Thank you, Sir.
I call the Honourable Shane Jones.